Now we're joined on the line by Carel Goosen, Group Deputy Managing Director at Shoprite, as we look into the retailer's share drop on the back of their R8 billion fundraising by issuing new shares and convertible bonds. Thank you so much, Carel, for joining us. It's great to have you on the program. So, I mean, you're basically going to be issuing around 27.1 million new shares, about 5% of total shares outstanding, and that's sitting at a price of 127 Rand 50. You're looking at proceeds of close to 3.5 billion Rand. Take us through the strategy behind the issuing of shares.
Yeah, the company has been, Shoprite has been on a growth expansion for the last 2 years, and we did very well. We got very well acceptances in South Africa as well as outside of South Africa into the African countries, but that unfortunately has come with a burden that it eats some cash. We had to invest in infrastructure. We had to seek some opportunities in properties, and that have obviously all cost us money, and we thought of strengthening our balance sheet to pay for all these luxuries.
Well, I mean, you're also going to be issuing convertible bonds, and you're saying you had to figure out a way to pay for all these luxuries. Was there any other thinking behind this? Did you put any other ideas on the table before actually deciding on this route?
Well, we would like to strengthen the balance sheet to an extent that we've got something left there, that there's from time to time acquisition opportunities come our way. And without having a strong balance sheet with lots of cash on, it's always difficult to pursue those aggressively. We think that we are in a position now to do that, so we're looking forward for the time ahead.
Okay, so you're converting essentially existing short-term funding to longer-term loans, and then you're providing funding for long-term investments and growth opportunities. Just give us an indication of what your balance sheet will look like after this.
Well, the balance sheet should be able at the moment. I mean, we're borrowing on overnight facilities on average about 3.5 billion Rand at the end of each month. We will obviously repay that. That will leave us with 4.5 billion Rand left. We intend spending another 1.5 billion in the next 18 months on distribution capacity to increase that. And then we are also considering maybe investments in property funds into Africa, particularly Nigeria, where we are finding very keen opportunities for us to expand, and we think that should we invest some money in there, we can accelerate our program there.
Carel, just to reiterate that point, if you could please, you're going to be investing in property funds into Africa, particularly looking at Nigeria. We know that one of the big issues that when it comes to retailers is the fact that they can't find malls, the right property to invest in. Is this now going to be your strategy, that you're going to own the property in which you operate in that region? Well,
temporarily we would like to own it. I mean, you know, it looks like we've got a little bit bigger appetite than sometimes the property funds, and we think that if we can get in first, invest in there, you know, get a matured, you know, position, then we might be able to on-sell that and move to the next property. So that is definitely part of our strategy, is to invest in property and see whether we can't grow the country, you know, faster than what's been growing up to now.
So how much have you actually earmarked for this venture into, you know, the property space in that West African region?
Yeah, nothing has been fixed for us. We're thinking of 500 million. If that goes well, we will probably put another 500 million in there, but we will start with baby steps, and we will grow it as the opportunities present itself.
If you could also just touch on the overall competitive environment. We know that competition is starting to heat up. Is this now your response to ensure that you do maintain market share and also increase your footprint dramatically on the African continent?
Yeah, I think we're making, I mean, like I said, for the last 2 years, we've been very aggressive with our expansion program. And we're obviously doing that, I mean, to be prepared for the headwinds to come is just in a better position. So we're doing as much as we can now, while it's reasonably, you know, quiet on the continent still. And hopefully we will be in a very favorable position when those headwinds come.
Just Carel, just very quickly, when it comes to just future acquisitions, I mean, we know we've spoken on the property market. Give us an indication in terms of any other acquisitions that could come to the fore going forward for you. Are you looking at other food retailers in Africa?
Yeah, I think, you know, within South Africa, I think the competition authorities won't allow us to look at really big buys in South Africa. But outside of South Africa, the problem is that there is none. So there's nothing big that we really can pursue, but what we are constantly doing is we're looking, you know, outside of the African continent, whether there is opportunities there, and we would like to utilize that should the right deal come our way.